Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for April 16th, 2017. Market breadth. With this past week's market decline, our bull-bear point and figure ratio at 1.27 fell slightly from 1.34 last week, continuing within bullish territory. The total count of securities in bullish or bearish patterns decreased 1% to 3,037. The count of bearish stocks increased 2%, while the count of stocks in bullish patterns decreased 4%. The Pirls PNF Market Breadth Summary chart shows us a market now 22 weeks in bullish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To subscribe to the Pirls Stock Market Commentary weekly email, free of charge, simply enter your email address in the space provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 39 points for the 12th decline in 15 weeks. At a negative 33.95 points, it continues below all 7 tops above plus 100 and continues above all 4 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 0 accumulation days and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum. Now at a negative 101.23, down from a positive 8.17 last week. The CCI20 daily formed a zero-line reject long entry signal at Monday 4:10 close. However, the next day at Tuesday 4:11 close, the CCI20 daily dropped below the zero-line pivot, so we exit the trade at Wednesday 4:12 open. The result of the trade was a loss of 7.57 points on the Nasdaq, or 4 cents per share of QQQ. There are now 3 consecutive days of the CCI20 below zero. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI20 of the Nasdaq Composite Index began a Woody's uptrend 50 weeks ago, while the daily CCI20 began a Woody's uptrend 21 weeks ago. The CCI20 weekly has fallen to a positive 66.51 from a positive 92.59 last week. We await the return of the CCI20 weekly to the plus or minus 50 range for another potential trade. Industry rotation the last 2 weeks. 4 of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: gold and silver and REITs on top, banks, brokers, some tech, and oil services on the bottom. Bullish, REITs continues in the top 5. Gold and silver has re-entered the top 5. Oil services has re-entered the bottom 5. Bearish, KBW Bank, brokers, and networkers continue in the bottom 5. Semis has entered the bottom 5. Computer hardware and disk drives have left the top 5. Focus this week from www.macromon.wordpress.com. Why the equity bull market must continue. The following are some key points and charts. The last time private and state and local government pensions were fully funded was at the end of the stock market bubble in 2000. Even with stocks making new highs, these pensions remain $2.33 trillion, or 27% of their assets, underfunded at the end of 2016. One would think the slope should be headed south as stocks rise. No, just as it was from 1995 to 2000. On the contrary, unfunded entitlements are heading parabolic north. Could the cause be a combination of an under-allocation to equities since the dot-com and financial crash, and rising pension entitlements, mainly in state and local government retirement funds? Probably more the result of the later. It seems the only way out of the pension mess, other than massive contributions, tax increases, or defaults, is a humongous equity bull market with pensions appropriately positioned. Will Janet Yellen and President Trump do, quote, whatever it takes to preserve, end quote, the pensions? And will it be enough? Thank you for watching this week's Sand to Pearls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant Easter weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.